Welcome back to WESPN, where we break down the latest trends, stats, and economic shifts impacting home buyers, sellers, and investors, of course. I'm Paul, and of course I'm with Scott, and today we're diving into January market stats, the potential impact of tariffs on real estate, a hot topic, the latest interest rate decisions by the Bank of Canada, which were released last week. So whether you're an investor, first-time home buyer, or just curious about where the market is heading, we've got you covered as always. Scott, how we doing?
Oh, really good, man. What's with the change of positions here? Because last week we were across from each other.
Last week, when the episode was posted, I felt we looked sick. I felt we looked very unhealthy. Could just be the way that we actually look. I'm not sure, but we're switching it up, trying to switch up.
Yeah, that side angle was.
Yeah. I got good angles and bad angles, and we were recording that whole episode on a bad angle for the old boy. So we decided to switch it up a little bit. It's market stats week anyways, so when it's market stats, we're always standing on business. So here we are, back to standing. We'll play with it a little bit. We do have an actual studio that we're playing with in the back of the office. So I'm sure at one point we'll transition to an actual studio, and that'll be pretty cool.
Looking forward to that. We got the green screens there and whatnot.
Screens are up. We're probably going to bring in a designer of some sort for that. Make sure that when we do it right, like we do, and that's exciting though. I think it'll be one of the few real estate offices that would have an actual studio, and that's where we're heading.
Been in the works for a couple of years now. So
it has. Loving the new office and the space that it allows us to do that type of stuff. So let's start with the numbers. So total listings, 1,079 in January compared to 855 last year. Compared to last January, that's up 26.2%. So inventory still remains high. Those are total active listings. Total sales, 323 compared to 351 last year. The sales in January actually down almost 8%. But what's interesting here is the sales volume at $192.7 million in January compared to January 2024. $196.4 million, down 1.89%. So
it's a lot of interesting data there, right? It kind of doesn't make sense.
Yeah, when I break it down, it just says to me, with the sales being down, but the sales volume almost remaining the same, sounds like the average sale price is going up a little bit at least. Now, when you look at the data, January is a weird month because the first half of January was slow. Right?
Always is.
Yes, and I thought it would get off to a quicker start maybe a week earlier than it did, but it didn't really start going until mid-January. So February would be a great gauge for us. I think February is going to tell us actually where we're at. Again, we talked about it before. Multiple properties are in multiple offers. I know one last night had 20-something offers. It's very price range specific though.
Yeah, big time. And once again, if this was 2, 3, 4 months ago, this would not have been happening. No matter what you listed a property at, I don't think you'd get this kind of activity. But I'm seeing multiple properties, ourselves included, but also other agents in our market that are generating 60 or 70 showings on their listings. Now, that's a combination of low inventory, right? It's January, there's not a lot of properties for sale, so everybody's competing for the same minimal quality supply. And this happens every year, right? Yeah. So no surprise, we've been calling it for several months, and we anticipate this is going to kind of continue, but level off as more supply comes to the market.
And again, it echoes the average sale price for January was $572,000, and that is actually up from last January. Mind you, to compare this January to last January when we were in 2024, where it kind of steadily rose, not crazy, but slowly but surely. More listings and lower sales volumes suggest a buyer's market, although it does not feel like that. And again, I'm going to attribute that to the first half of the month being slow and the second half being very busy. And look forward to February numbers. I think February numbers will be a great gauge for us.
I think January, you can't really draw too many conclusions. The data is too skewed by a whole half of the month having pretty much zero activity.
Number of current listings right now from Tecumseh to LaSalle and everything in between, which we like to track, is at 562, and that'll run in a peak market where everybody's listing. That'll get into the high 7s, low 8s. So inventory, that still does indicate that inventory is lower this time of season, which is why we get these multiple offers. So prices are up slightly, but more listings mean more choice. Sellers are in a strong position, but pricing aggressively is key right now to get them in.
Big time, yeah. I would say slightly below what your expectations are, or market value is. And by slightly, it might mean $30,000, $40,000, $50,000, but you want those people coming through the door. But you also don't want to list too low.
Yeah.
I've seen a couple mistakes where they're listing 100 to 150 below market value, and then you're kind of setting the expectations really low there. I've seen that backfire a few times on the board, in my opinion.
Yeah.
But you want to find that nice list price that gets just a few extra people in the door, a few extra offers on the table, and then hopefully drive that price a little bit higher.
And there's no doubt in my mind it is listing specific. It depends on the price range of the listing. If you're, let's call it 800 and above, that strategy will change. You can't be so aggressive on the list price because the buyer pool is much smaller, right? So anything 600 and under, the buyer pool is out there. It's a large buyer pool, and it's a buyer pool that's very active right now. So again, this doesn't work for every listing. It depends on your price. The strategy should be custom to that listing, and you should have the numbers to back it up. But if you're in the lower price range, no doubt in my mind, you can go a little bit more aggressive.
And this strategy might shift as we proceed into the year as well, right? We're gonna be watching. We adjust weekly, if not daily here, being tuned into the market. So yeah, keep that in mind as well.
Elephant in the room now, tariffs. Scott, break
massive.
Break this down for us. What's
going
on out there?
Yeah, I mean, obviously we got the pause, but it was pretty scary for a couple days there. Even myself, I was like, wow, this is massive, because Canada doesn't have the economic capacity to absorb a tariff like this. A significant portion of our goods are sold and shipped to the USA, and you slap at 25%, it makes Canada pretty uncompetitive. And over the past 9 years, I think we've really underinvested in our own economy. So when something like this happens, we don't have the ability to absorb that shock. Now, when we talked about the potential for tariffs 2 weeks ago on our last episode, I kind of said, I don't think they're going to actually follow through with it. I think it's a negotiating ploy, and the U.S. is in a powerful position. They want to get what they want. They're using this. But when they actually slapped them on technically, I was like, oh, wow, maybe I was wrong there. Luckily, we got that pause, but it was a pretty big deal. Now, here's the interesting part. We talked about this off the cuff here, but you had mentioned what impact do we think the tariffs would have, right? If they actually go through with this, if this goes on for months and months and months, or potentially years. And some people think like, oh, the market would really crash. And theoretically it would, right? If the government didn't step in and intervene, if these tariffs were slapped on Canada from the US, the market would crash, like the whole economy would crash, I think. And Ford, GM, Chrysler, all the suppliers, the housing market, all that stuff, right? So, but what we saw the Liberal government announce, including Doug Ford as well, that if these tariffs were put in place, they would step in with pandemic-like financial assistance for the market.
That's how they presented it.
Literally, those were the words that they used. So it's hard to gauge what would have happened here, because what we may have seen in response to these tariffs is emergency rate cuts down to 0% again, or 0.25% like we saw during the pandemic. And then injecting a ton of liquidity into the market via banks and money printing, essentially, which has severe consequences down the road, which is what we're dealing with now with the inflation and whatnot. But for that period of time, it could have been a couple, 2, 3, 4 years, you have all this money injected into the economy with low interest rates, and you might see asset price inflation, even though our economy is like completely stagnant. So it's hard to predict because of how the government might respond.
Yeah, and I know on our end, it feels like we're getting out of. I mean, during COVID, it was a 2-year rise, and then after COVID, it's kind of a 2-year slide, and it just felt like we're
finally getting back to normal.
The bottom is done of that cycle, and we're heading back up. And then, of course, another thing that's out of our control, comes into the marketplace and it's just like, okay, all right. Like,
Here we are again. Yeah.
I've got CNN and CBC on in the office and just tracking all of it because it will have an impact on our market for sure, especially here locally with the automotive sector. Now, I feel that, you know, the America and Trump is just like, right now they're like, look what I could have done to you. Like, look at the mayhem that this caused. Let's work together, which is buying 30 days. We'll see how the 30 days plays out. But, you know, if these tariffs get slapped on Canadian goods, it's not gonna be good.
Yeah, people were kind of missing the forest through the trees when they basically came out over and over again, whether it was Trump or his administration, was saying this is not a trade war. We're not trying to engage Canada in a trade war. This is a negotiating tactic because we don't feel that they're serious about some specific issues like the border and some drugs, whatever. And people are like debating this, but it is a problem. Yeah. And despite our government's claims that only 1% of fentanyl is crossing the border, whatever the case is, obviously the U.S. disagrees. And I probably disagree as well, you know, having worked there for a long time. Yeah. You know, I saw from the inside there what was happening from an enforcement perspective. So regardless, they want that lockdown. The U.S. is very serious about the border. So if we comply and partake and get our border under control, obviously, we brought up a great analogy, right? You were talking about, you know, if you keep your house in pristine condition, but your neighbor's front yard is in mayhem and out of control, you might be like, hey, get your house in order because you're devaluing my house and the whole neighborhood as well. So I think that's what's happening here. It's not a trade war. It's not meant to be. It's meant to force compliance. And the U.S. can absorb 25% tariff on Canada, even though we ship a lot of goods to them. They have a self-sufficient economy, and they get goods from all over the world. We don't in Canada. So the counter tariffs were an interesting play by Canada. I don't think it was a very smart move. They had to show some force, right? But I don't think it was a very intelligent decision.
And for the relationship between, I've always been proud of the Canadian-American relationship. It does feel like friendship and all of that, and I hope that remains. I mean, I hope that relationship remains strong and you know, these things that are out of our control, though, it's frustrating, right? Where it's what happens is we can't do anything about it. Canadians in general are all up in arms about this right now, but your own government's been taxing you like absolute insanity for years, and we just have been taking those left and right. The taxes here are absolutely ridiculous. I hope at some point that becomes a topic as well, right? Where you're taxing your own people, and it's becoming very hard to live in Canada, right? I think that's the bigger picture.
And that's as an individual. How do you think businesses that are looking to set up shop, right? They have the option of going anywhere in the world. A lot of these big corporations, and when they see what's happening here and the hefty tax rates, the carbon taxes, and all that stuff, what do you think? How do you think that impacts their decisions? So a lot of the investment we're seeing right now in Canada is because it's subsidized by the government. Yeah. And the great example is the electric vehicle plant here, LG Stellantis. In my opinion, there's no way a private business would have set that up. It wouldn't have made sense. It's only because the government is offering billions of dollars literally in incentives and basically paying for it that they're even willing to set up shop here. So a lot of topics that are being brought to light by this threat of a trade war. Luckily, we think it's going to pass, and it'll be forgotten in a few months, but definitely a scare there and brought a lot of things to light.
Do you think, once this 30 days is up, that it's actually going to go through?
No, I think Canada will play ball. They have no choice. Yeah. They literally have no choice, and I don't think the ask is overly burdensome. So I think it'll go away. There might be some increased tariffs, but I don't think it'll be a blanket. It would have hurt a lot of U.S. businesses. Let's not get it twisted. It would have really disrupted the whole supply chain, probably globally. So it's not really necessarily in the U.S.'s best interest either to just slap blanket tariffs. So I think it's gonna go away. I think they've made it quite clear this isn't about a trade war.
Now explain what happens when we do pandemic-like measures and inject a bunch of money into the economy. I mean, our dollar's already so much devalued.
Oh yeah.
That would absolutely slaughter it, right? Explain what happens to an economy and the power of a single dollar when you inject billions of dollars into an economy. Long term, short term, it's obviously going to solve a problem, but long term, what does that do to a market?
Yeah, so it's whenever new money is injected into the system, what people don't understand is what we see is asset prices increase, right? Whether it's the stock market, real estate, you see prices going up, but what you don't realize is the prices aren't actually going up. The value of the dollar is going down because there's more money chasing either the same amount of goods or fewer, right? So now there's more money in the system. There's more money to go after these hard assets. And basically, a hard asset is anything that's harder to create than dollars. And we know that the government can create dollars out of thin air. So anything harder than dollars will hold its value and or rise in value. So, and that's why we get inflation. Now, this was happening during the pandemic, but what they kept reporting was that core inflation was low, right? 2%. And they kept saying, oh, inflation isn't an issue. But meanwhile, housing prices were jumping 20% a year, right? Rents were jumping 25% a year. So we had asset inflation without core inflation. And that's because a lot of the core inflation stuff is easy to reproduce, right? It's easy to make a lot of cheap goods.
Yeah, I don't think our economy could handle another massive injection like that. So I mean, I hope these tariffs don't happen, but like you said, they may happen in a lighter sense or with certain products or services. But
not
blanket across the board would be not good if we had to inject all that money into it. Again, we're just getting out of a lower cycle here, so just leave us alone.
please.
Right from the
we've been through enough.
AW for you, just let it. We're just working, man. Just leave us alone. But again, so things that you can't control. We'll see how it plays out. Now, we had an interest rate cut since our last episode. What does that mean right now for the market?
Yeah, another quarter point cut. I always say that the actual cuts are less important to me than the forward projections, and they did anticipate further rate cuts. Most people are calling for bank rate settling around 2.25. Yep. We're at 3 now, so that indicates at least 3 more quarter point rate cuts throughout the year. And we need them, honestly. Our economy is stagnant. Our housing market is stagnant. Windsor's the bottom pricing for Canada from a city perspective. There's big issues in these bigger cities. Toronto condo market is in shambles. Inventory is rising. People are sitting on, banks are beholden to these loans. There's a lot of systemic risk there if things don't come into balance. So our rates are still too high, which is crazy because the bank rate's only 3%. And it's crazy to say that they're too high, but they are for our economy to function. So we got a ways to go. Yeah. And obviously every little quarter point, we know it's not really improving affordability yet because we still have the stress test you have to get qualified with. So when you're going to the bank, they're qualifying you at the fixed rate plus 2%. Mm-hmm. And it's not really improving your approval amount. It's helping with affordability because your payments can drop a little bit. But what you can get approved for isn't going up yet. So we need a few more cuts there.
Yeah, speaking of the Windsor market, I think people don't realize how and again, I talk to agents all across Canada in every town. Windsor's pretty insulated down here. Nobody really bothers us down here. We're not affected by other markets so much. If the GTA market's down, then that whole surrounding area is going to be down. We just kind of go to the beat of our own drum. We're a very healthy market. We're a lot busier than a lot of markets across Ontario. Some Calgary, let's use Calgary as an example. What do you think the average sale price in Calgary is? Is it more expensive here than it is in Calgary?
I believe it still is. Calgary's actually been the strongest market.
Yes, for gains, yep.
For gains over the past year. While Windsor was kind of dipping, Calgary's actually increasing. I had a couple of properties out there that's why I was paying attention to it. But it is true. I don't know if it's caught up to Windsor in an average sale price. I don't think it has yet, but it's on that trajectory. And Windsor's, yeah, you're right. It's insulated. And that's what you get when you're the cheapest city in Ontario. Yeah. It's insulated from the big shocks in a way that the other cities aren't because when you're at the bottom, how much further can you go down, right? Yeah. So I don't like playing at the top of the market for investing purposes. And then when you're the cheapest city, you're going to get other factors coming as well, right? businesses are going to choose the cheaper city. People are going to still migrate here because it's about 50% cheaper than the GTA. So those little things insulate you a little bit from some of these big shocks.
Yeah, and again, the population is still being driven down here. We're consistently on the rise, and I'm seeing a lot of businesses coming to town to be able to support that. And I'm not talking big businesses that do production and stuff. I'm talking stuff like the indoor golf, and I've seen like indoor pickleball courts open and stuff like that, because the population, as it grows, you get more restaurants, you get more recreational stuff, you get more stuff that improves your quality of life, and that's nice to see.
It's always what comes first, the chicken or the egg, right? Do the businesses come first and the amenities, and then that attracts the people, or do the people come first and then that attracts the businesses because you have the population to support them? I think it's actually the population has to come first, because it's too risky to set up these businesses if you don't have the population to support you. So we had a big population boom. I mean, statistically, 12,000 people a year for a small population like this is pretty big time. So we're starting to see the businesses follow. So it's looking good for Windsor long term.
Starting to see crime go up too, but I think that's across Canada.
Yeah, we got to get a little bit tougher on crime.
Yeah, and I'm looking forward to the direction of Canada in general as we get into an election this year and see how that all plays out. Leadership is so important in all aspects of life and business, and under new leadership, I feel there'll be some things implemented that will be to the benefit of Canadians. But
couldn't agree more.
Yeah, absolutely. So closing thoughts here. Market's busy. Okay. First half of January, slow. Second half, very busy. Very price specific though on the listing strategy as far as pricing is concerned. But whether it's 100,000 or $1 million, that process should never change. The job of the realtor is to put the best product out there for the market and do whatever it takes, no matter the price range. And get guidance on that stuff, right? Get guidance on that stuff. There's not a one fit for every listing, for every client. It's all about that initial meeting and sitting down and setting up the right strategy and backing it with why you're doing what you're doing for your buyers or sellers. That makes sense for their specific situation.
Love it.
Okay. Guys, thanks always for tuning in. Any questions at all, you know the drill. Always reach out to one of us and we'll be more than happy to serve. Have a good day.